backside, right?
All right, everyone. I'll be the one who is going to attend the session today. And today's topic is market structure and price action with SNR. So I'm just starting my screen sharing. Okay. All right. So today's topic is market structure. I would like to know how many of you are aware about the term market structure. Anyone?
Yes, sir.
Yeah. Can you please?
According to my belief and what I learned so far about market structure,
Yes.
the way you explained to us earlier, go to the higher time frame and check. So it is called uptrend, downtrend, sideways market, and that is called market structure. Whether it is going in one direction or ranging direction, whether it is bouncing back between the SNR, is it respecting the levels, and what that is called market structure, according to my knowledge so far.
Right.
That's all.
Absolutely right. So basically, the market structure is something that we identify the levels and the how the market is flowing down, whether it's going down, whether it's going up. What is it saying on the higher time scale and what it is saying at the lower time scale, right? So what we are going to explore today is the market structure first, where it reacts. So that is our watch out points, where we marking down the support and resistance points, right? So that is what the key level, we are going to discuss today, and then we'll go to the support and resistance. Okay. So consideration to analyze the market, there are four different section in this. When we are planning to analyze the market, when we are starting the day, I would like you everyone to go to the higher time frame. If you are on the MT5, you can go on a weekly. If you are on the trading view browser based tool that I provided you, that will go maximum to daily time frame, and that is what sufficient is, I believe, for every one of us to check the bias of the market. So what is bias? First of all, bias is the identification of where the market is moving on the higher time frame. If you see that the overall market is in downtrend, that is your bias to be there for the remaining day. So if we are trading in the crash or boom, if the daily time frame says that there are 5 candles red in the boom, so your bias would be sale. So that's where you see that what you need to seek is the stronger confirmation for the buying, because in boom we always trade uptrend, right? And in crash, if the market says your bias is sale, so for the remaining days you will find the entries on the lower time frame for the sale, because already you are in downtrend, and it would be very good opportunity for you to find the sale point, correct? So that is the first section, where you go to the weekly time frame, daily time frame, 4 hour and 1 hour. So coming from weekly to daily, daily to 4 hour, 4 hour to H1, which is your 1 hour time frame, and then you find M15. That is your minimum level where you can go and make your entry if you are doing a long-term swing. Can you please mute your mic? Okay. So that is your first point, to identify the market bias, correct? Then you come to marking the steps. Now, when you go to the daily, weekly, H4 or H1, I'll show you how you can draw the support and resistance in boom and crash, because there is a different terminology to do that. I have seen your charts. You sent yesterday your charts with the multiple lines where you put the different time scale of different colors. That is good. Actually, that is the way you can identify on the lower time frame that this is your 1 hour resistance or support. This is your 4 hour resistance or support. So that is the second step, where you marking down your levels on the chart. Then comes third is your channel or the trend line. So after you identify the support and resistance or supply and demand levels in the second step, you would go to the trend line and channel. And this is the most important part. This is the most important part, because in boom and crash, this is your 50% or 40%, I would say. 40% chances that you will get the reaction where it works on the support and resistance or supply and demand. But if you go to the trend line or channel, that will be your higher chances to get your reaction at. This works 60 to 70% of the time. Okay. And then entry and exit. So how you will combine this all four things together will come to your entry and exits. Once you identify your bias, you draw your support and resistance lines, you draw your trend line and channels, and then you come to the down scale of 15 minutes or 5 minutes and make your entries. You will see that this is your correct entry point at lower time frame when you see the reaction at the market. Right? Any questions on this? All right. I guess there's no question. So I'll move forward to the next one. This is your flow. For the next 2 days or 3 days, this is our flow. This is how we will go through it. Identify the market structure, supply and demand, which is your support and resistance, importance of the trend line, trend channel, chart patterns, and confluences. This is your important role, confluences. Now, what is confluence? Can anyone tell me what is confluence? Do you have any idea about the confluence?
Yes, sir.
All right, go ahead.
For example, we draw a SNR.
Okay.
And there is a trend line. Where both crosses each other, it is called confluence area. So high probabilities market can bounce back from those areas.
Perfectly right. You have understood very well. So this is your most high probability point where you can get your entries. When you see the reaction at this point, you should understand that the market will really move in your direction, desired direction, because this is the most important part. Confluence, where it meets your trend line here. And if you see there is a rejection, and if you are in a crash, you would know that this is your point to sell, because you see that it meets the trend line, it rejects from the trend line, it rejects from the resistance. That is your entry point direction. That is your signal that it would go in your direction now. Okay, we will see that in the chart as well. Now, this point is very, very important, very important, because as you see, your charts should be very clean, because when you are drawing the chart, when you are marking up the chart and you have so many lines, right? Like this, like this, like this. You have this trend line, you have this trend line, you have this trend line, this trend line, and then this trend line. Now in this chart, you will most probably get confused. Why? Because probably you would see if the market is here and you see a rejection, you will get confused, because you might think that this is an uptrend, already an uptrend, which came from a very strong support level. and then you have a rejection, you would think that this is an uptrend and there is a chance that market would not make it out and it would go up. And you will wait for market to reach this area because that is your next level. And then the market falls down from here. That is your FOMO. That is your fear of missing out area. Why this happened? Because your chart were messy. It was not so much clear that you have missed out the opportunity. So what I need you to do is go very creative with your chart. Do whatever it is necessary. Don't just overburden your chart with so many lines. You don't need the so much of past data. No, wrong. What you need is just today's data or a day previous data. That's it. To analyze the market. Go with that. Just do the bare minimum lines where your market is, and then you will realize that now I am confident to enter this trade because the market structure says that this would not go up more than this. That will give you more confidence. All right. So basically, do less with your chart. Don't just overflow it with so many lines and trend lines and channels. Okay. So I will go with this one. Just a second. Okay. Can you see this market flow?
Yes, sir.
All right. Okay, fine. Now, can anybody explain me what this describes? Anyone?
Uptrend,
It's showing the trends.
showing uptrend, and the market is moving. That's making lower highs, lower low from the left, and then from the right, making higher high, higher lows. That's going up.
Correct. So in boom and crash, irrespective of the Forex market or the binary market, this boom and crash market has a different tendency to play. It behaves very predictably. So if you go to your chart, I will show you same on the chart. Okay. If you go to your chart and remove all the candles and make it a line chart, okay, there you will see this type of patterns clearly. Let me just show you on the chart for a moment. Okay. So this is your TradingView application, web-based application. Okay. Now what you need to do is, this is 24 hours chart. You can see it, right?
Yes.
Okay. What you will do is, you will go to the, instead of candles, you will go to the line chart. Okay. And in line chart, if we go to the 4-hour time frame instead of daily, now this is what the market shows you. So you will use this line chart to identify your key levels. So how will you draw the key levels? From the line chart, because this is the most accurate method of drawing the key levels. Now you can see there are many things in this. There are basically many tools in this, and so this is your lines. Let's make it same, right? Then you have this bottom. We will correct it later. This is your another point, and this is your probably next point. So in 4 hours chart, I have only 4 lines. But what I need from the market, is I don't need this line. Why? Because the market is right now here. and it will take days and weeks to reach here. So I'll delete this. What I need the data is this much only, correct? This much only. So where you draw the lines? You draw the lines here. You see how accurate is this? If you put the candles, probably you will get confused that probably this is the highest key level, right? But it is not a key level. There is a level, but it's not a key level. Why? Because if you go to the line chart, the market is showing maximum touching point is here. It acts as a resistance. It acts as a resistance, support. So there are a maximum chance over here that you get the reaction. Okay.
Okay.
Now going back to the slideshow where I wanted to point out you.
I have a question.
Yeah, sure, please.
So is it better to use line instead of candles?
If you want to draw the support and resistance levels, I would suggest you to go to the line chart instead of the candles, because that will give you the more better idea rather than a confusing, candlestick pattern. Because as I explained earlier in this chart, let me just go back to this chart, and I guess someone is speaking, but the voice is not coming through. It's lagging.
If you don't mind, could you please minimize this chart window? Okay, fine.
Okay, so that's your resistance. That's your resistance. Here it taken the support from the same level. This is your resistance, right? That could be your key level. Agree? This could be your key level. You would assume that and put a line over there.
Sir, just question.
Yeah.
When you say key level, what exactly the term key level is?
Key level is where the market touches it maximum time and make it either support or resistance. That is your key level, and that is your most probable chance to get the reversal of the market, right?
Okay.
You do not
again, please.
Got it.
Come again, please. Is this my network went off?
Yeah. So when the market goes like this, okay, this is a ranging market, right? As you all can see, this is a ranging market. What should be your key level in this area, where you would find a good reversal? Your reversal would be either at this area or at this area. Why? Because these areas have got many rejections and turnover time. Here it rejected, it crossed it, it came back in this same area, it rejected, same area, it rejected, it crossed it, it came in the same area, and it is rejected. So this area is your zone where you can expect the market to give you a more trading opportunity. So you need to find the key levels first in your chart. Okay, now going back again to the slideshow here. So in this area, you see the market is making impulsive move, corrective move. Now you all must be aware about impulsive move and corrective move, right?
Yes.
That's your impulsive, and this is what?
Corrective.
That's your correction. That's your correction. If the market goes like this, then this is your impulsive move. This could be your correction, correct? But it doesn't work like that. So in this chart, whatever graph we see in the line chart, this is your impulsive, this is your corrective. This is your impulsive, this is your corrective. Now, what you need to watch is this area, the previous market structure high, which was this. And if you draw a line, what market is doing is, you need to be observant about the market flow. When you see the impulsive move breaks the previous high, market structure high, that means you are in an uptrend, correct? And you will wait. If this is a boom market, that's a good sign to go for a buy. But if this is a crash market, what you need to do is, you need to find the selling opportunity, right? So if this is a impulsive move, what you need is, the market should break below this previous swing high, correct? This is called a swing high, and this is a low. Market works all the time in this format. It makes higher high, higher low. Then there is your lower high and lower low. So that's your lower low, that's your higher high, that's your, what do you call this?
Lower low.
Lower low.
Okay, and this is
Low.
Higher high.
High.
higher high.
Higher
What-
high.
What is this?
Higher low.
Higher low.
Lower low.
This is higher low,
Higher low.
Higher,
because
yes.
this is higher than this areas. Okay, so once you see this market is making this movement, you should understand this. Okay, this is an uptrend, and if you are in boom, you don't have to worry about this, because you always want to buy in boom. So this is a good sign. If we find this, this is a good sign, correct? Because we may get too many buying opportunity. If it breaks this structure, if it breaks this structure, that's your buying opportunities. All right. In this market, that's your key level now, because the market has come back and tested it. Once it's broken, you will need to see that the market is coming back, and if it is rejecting at this area, that's your sign that in boom, you will buy here. Why? Because this was the low, this was the higher low than previous low, correct? So that is showing you the sign of an uptrend, correct? Now, what you will need to watch in the boom market is, when you are in a buy opportunity and when you are in a trade of buying, this is the area you need to watch. This is your first TP, first target point to exit the market, because this was the market where it came back. So the market will definitely make a correction here, correct? Market will definitely make some correction at this point. If it doesn't, then you are in continuation trend. But if it does, then you are exiting here and wait for the market to give you another sign. So what this showing you here? Did the market broke it? It
Yes.
broke it, yes. It broke it and came back. So when it is coming back, now what in this market, what would you do? Will you buy here? Can anyone tell me?
No.
No.
Why would you not buy here?
Because it crossed the higher low.
It broke
Okay.
it a little. Yes. So it might return.
Okay, that's a good
Yes.
sign. So that is the clue. That is the security zone. Now you are seeing that that is a security zone that you may have a fear that the market has broken this line a little bit, correct? As it shows
Yes.
that the sellers were pressuring up to go market more down, to take the market more down, right? But it
Yes.
couldn't. Now, what is your next point to watch here,
Yes.
right? If it breaks, then you are in continuation, right?
Right.
If
Yes.
this market is getting broken, then that is your surety that this market is gonna go more up. Why? Because the market has tested it twice. Correct? And this
Correct.
also been tested twice. So this range is broken now, meaning the market has more chances to go up. So basically, in short, in this chart or this formation, what you need to confirm is one, your probability. The more you find the probability, the more chances are of winning trades. So what you need is the more confirmation, basically. Correct? Now, after this levels is get broken, the market will not continue straight like this always, right? It has to correct. If it makes an impulsive move, it has to correct itself. If you see in previous market, if there is a previous data in this region, you would probably make it out whether there is a resistance or support in previous market. If there is, then there is your first TP. If you enter here, this is your
Excuse me,
first
lot of
TP.
noise, sir.
Can anyone mute your mic, please, if you are not speaking?
From Suryakant, there is a voice, so you can mute him.
Okay, I'm just muting. Okay. If you want to speak, you can unmute yourself. Okay.
Sure, sure.
All right. So if this market has a previous data, and if you find that this is a resistance, strong resistance, you can set your first target point over here to take your profit and secure your profit after you enter the trade here. Okay. But if the market is strongly getting broken, if you see that the market is not reacting over here, what you will do? You will increase your take profit to your next level, right? Because already you know, now that already you know the market is not going to go down because it is not making any lower lows. Correct? So that is your
Correct.
probable, that is your three probable chances, higher probable chances you found that the market is going to go up. And that is how you find the market structure. So here, if it is not breaking, then you will ride along that trend. Correct? Now, after this line, this is your market structure. What do you find here? Can anyone tell me if you find anything over here in the next region? Let's figure it out after this. After this market, what do you find?
No new
The
highs.
market
Market
is going
started
down.
falling down. Market is
One by one, please. One by one.
market started going down
Okay.
as the impulsive wave 1, 2, 3 is completed nearly.
Okay. Can anyone
So,
find any pattern?
M pattern.
Yeah, there is a head and shoulder
and
pattern.
shoulder.
Perfect. Right. But what if we don't have this market generated? This market is not generated yet. Please understand this. If you see this impulsive wave, correct? And this market is not generated yet. Now that I have shown you this head and shoulder pattern, you recognize that very well for that. But what if the market is not generated here? What will you do?
We have to wait for the
Wait.
new high
Breakout.
or new lows in the market.
Absolutely
confirm.
right. See, I'm going step by step. There is a reason why I'm going very, very minor detail step by step. The reason is if you don't develop your skills to wait, you will probably get stuck up in the wrong trade. Okay. So that is what first we need to filter out. Why? Because we don't want to enter too early. Market is running 24/7. We don't chase the market. We wait for it to give us a more confirmation that this is the correct correct trade, and you wanted to ride that more, not just 2 or 3 spikes. No, we are talking about a bigger scale here. Okay, that is the reason why we are analyzing the market, right? So after this market structure, what it is doing, you can see that this is your high point. The market has came back straight of breaking this level to test this bottom level, right? And now it is going back again. Will you buy here?
It's too close.
Hello? Can anyone tell me, will you buy here again?
No.
No, it's too close.
Too close, right? So
Yes.
there is a very short opportunity to buy here,
Yes.
because we see that the market has broken this fresh high very easily. Understand this. This is very important. This was the previous high. This was the fresh high. And this previous high has been broken very strongly, meaning the sellers are very strong now. Correct?
Yes.
So there is a chance that even this level, which was tested 1, 2, and 3 times, can be easily broken,
Okay.
because this pressure is too much. Correct? We need a secure trade. So what we will do is, we need this previous high should be broken to go in buy again and wait for this area to hit as a TP. If the market is breaking this point, we can buy. Why? Because the market is respecting this previous lows. It is not breaking. Very first point. Second point, it is coming back and breaking the previous high. Previous market structure high is breaking again, meaning this seller has got weakened now. So if this getting break, we can ride again up till here securely, because now we got the confirmation. And what would be your SL point? If we buy here after this breakout, if we buy here, my SL or stop loss would be just below that. Because now see, one, you see the sellers are getting strong. Second, if this is breaking and you are entering here, what you are risking is very short, because market probably would come back and test this level and then go up again. If it wants to go up again, your risk is very small here. Correct?
Yes.
Are you getting my point?
Yes, sir.
All right. If there is any confusion, you can stop me and ask. Don't worry about that. I'll go again and again. So now,
Sir, I have one question.
yeah, sure.
Now, after the top point, when it started coming down and made a higher low.
Okay, here.
Yeah, correct. Over there. So now we are in, say we are at boom index and we want to buy. So at this point, can we buy and keep a trailing profit at that red line?
Yes, you can. See, let me explain you. This is your strong key level, correct?
Correct.
Now that you know the market is rejected here first time, that was your resistance. Here, it was your support. Here, it was your support. And what is it doing here? If it goes up again, not going below, what is it doing here? It is rejecting, meaning now that you see that the market is making the higher lows, right? This is your higher
Right.
low, lower high, sorry. I'm sorry, my bad. Lower high, correct?
Yes.
So
Correct.
that is your probable chances here that you can take up a risk again, because you know that this 3 times market has rejected. This is your chance again to buy. But when you buy here, what would you expect from the market is that this level should be your target profit, correct?
Correct.
Yes.
It is a short trade. It is a short trade.
Short trade.
So you need to evaluate your risk to reward ratio. If you are entering here halfway, that's a bigger risk to reward, correct?
Yes.
So that is your wrong trade. But if you see a rejection here and take a risk, immediately you buy here, and if the market is moving and go this level, that's your winning trade. That's your good winning trade, because you risk what? A very bare minimum, correct? And your reward is higher. You are taking a chance from the very strong key point here to here, correct? Okay.
Yes.
Moving forward, the market has tested this neckline and broken strongly. 1, 2, 3. That is your head and shoulder pattern, correct? And if the market is breaking this neckline very strongly, you should understand that the downtrend is now probably starting. Why the market is coming up here? Just to test it out. Just to test it out. If the market is not getting higher than this point, you should not expect any buying trade further, unless and until you see the market is going back this level, coming up again, going back this level, doing this. This is your higher point, correct? Getting my point?
Yes, sir.
Any confusion?
No.
You must have any confusion what I explained just. I'm sure someone should have. Anyways, this is your lower high. 1 and 2. This is lower than this one. If you see this is lower than this one, right?
Yes.
So if you see the rejection here, what you should understand is that the buying opportunity is far below, correct? Because now you understood head and shoulder success. This neckline is broken strongly, market has retested probably, and the market is going to go down. Now you should watch this area. What you need to do is you should watch this area. If you see the rejection here, that could be your probable chances that the market would go in range. Okay.
I didn't hear you. Come again, please.
If the market is coming down from this area to this area, and if you see the rejection here, same way like it did here, what you can expect from the market? Will you go and buy again in this area?
No.
Can anyone tell me why would you not go and buy?
Sir, I would buy because it's a key level.
Because
it
has broken from up from the first lower high.
Yeah.
And it's coming down to this level. It broke the second the neckline, and then it's coming down to the key level. That's the last key level there. So the pressure is there that it
Excellent.
will break and go down.
Okay. Very well.
Yes.
Very well point. See, I would not buy again. Let me give you the reason for that. You see, this is the first time it broken the neckline very strongly, right?
Yes.
It has broken the neckline and tested this level, this previous structure high again. But did it broke it? No.
No.
It went up than this? No. It just went straight back. It is broken very easily. This level is again broken very easily. So this level is probably your false level now. It is not respecting last 2 times. Do you notice that? It is not respecting last two times, and this is
times.
the third time it is not respecting, meaning you should not consider this line as your key level anymore.
Yes.
Right?
Yes.
You should
Right.
remove this. You should remove this line as your key level first of all from the chart, because 3 times it has not respected in recent time zone. So that's your past. Forget about past now. So now in the picture is this level or this level, because the market is running in this region, right? So your consideration is and focus is in either in this level or this level. So if the market is bouncing off this level again, will you buy again? No, I would not buy again, because I wanted to now confirm that if the market is going strongly up again and coming to break this level, if this is getting broken, then I would wait for the market to reach here, because this is your next target. And this is very short area. This is very short area. This could probably a fake breakout here. And market would come back because the selling pressure is high. As you already aware that the selling pressure is already high. So there is no chance I would play any trade here unless and until market makes a new high here, retest this and bounce here. Then there is a chance, because that would be your confirmation to go again up. Correct?
Correct.
Making any sense of this? Right?
Yes, it makes sense.
All right. So now the market is going where? It is going down. And if this, we will wait for next level. Next level is this. So your opportunity lies down somewhere around here. Correct?
Correct.
Now that is your level. If you see this impulsive move is breaking here, non-stop it is falling down. And it is a downtrend. It is a downtrend. What would you risk here? If you see that the market is exactly coming here and give you a spike and boom, what you will do here? Will you buy? Will you take a risk? That's a very, very important question.
Well, I think we were advised not to take a risky trade, but my opinion, I think if the sellers has gotten to this level, they are becoming weaker.
All right.
So I can buy, maybe take the risk.
Okay, so there is 2 points. Actually, there are 2 ways. One, you become very safe and do not trade unless and until you find a very good opportunity. The market makes a high than previous high and retest this low again as a support, and then you see the rejection. That is your opportunity to buy. Okay, that is your safest way to trade in boom or crash. And the second thing is you take a risk over here, because after seeing this impulsive move, there will always be a corrective move. Correct? But you never know where would it make the corrective move. So what you need is you need a market structure, which is here. That's your key level. Okay, this is a fresh level that has been not tested ever since the market is going down. Correct? Going up.
Correct.
So this is a fresh level. So if the market is coming back here, it has to react. And if it does react here, what you can do is you can enter the trade here and set your SL here somewhere around just below that level, very tight. What you will lose? $1 or 2, probably, right? But what if your calculation plays it out? That would be your 1:5 risk to reward ratio. Correct? Because here, this is a small gap of the SL from the entry, and that is your 5 times more. So that is the calculation you need to make in the market. Getting my point? One,
Yes, sir.
you play safe and you don't trade unless and until you see the confirmation. Second, you take a risk and you take a bare minimum risk for the entry point. So if the market is coming down at the support level, key support level, and if it is spiking good, not a tiny spike, very good spike, then you should understand that probably this market would just go up high to test the previous market structure, or probably it would come down again and spike again and go up high. What you are risking here is just $2 from this entry point. So that is your risk, second level of trade, right? Okay, moving forward. So market is reacting here and coming back to the key level, which was previous structure. I will show you the same thing on the chart in the next slide. And then you get the reaction, correct? Now, what if you get the spikes here? You get the two spike here, small two spike or one spike, big spike. Will you buy here? Again, don't look at this impulsive wave of this breakout. Don't look at that. You just assume that this market is not happened and you get the spike here. Will you buy?
If there is a big spike, we will take a risk.
So now you know there are two ways of trading. One, you take the risk. If you get the rejection from the key level, because this has been tested twice, correct? And it is not broken yet, meaning there could be a chance for you to get another move, correct? And
Yes.
if it is straight getting broken, then you will have to wait for the previous market structure or find the level before you enter the trade, right? So if you see that the market is broken after this level, what you need is the previous market very key level to show you the rejection to trade. Or the second option is the market should make a next high than the previous high and retest and then break it out. That's your confirmation that the now market is ready to go up. That's your safest place. So if we wait for this market for 2 days, let's say for example for 2 days it just keep getting down, now it make correction, then comes down. Now you know the key level, correct? If it bounce back from here, you can buy, right? Correct?
Noted, sir.
So the safe TP is always your previous market structure. If you are risking here, the safe TP is the previous market structure. You can watch here. If the market is getting back again, you can exit. Take whatever profit you have, correct? But
Perfect.
if the market is straight away spiking above, there will be a time you will see that this is your resistance and you get reach here near the resistance and the market is give you this big of spike. It just simply broke it, correct? What you will do? You will wait. You will not close your trade. You will wait. Why? Because the market would probably come back here and just spike again, right? So now you see the double bottom after this trade, correct? You see the double bottom?
Yes.
And that's your W, right? If the market is respecting this level, what you would need to see is this level is getting broken again, or this level is getting broken. If this wave is breaking out straight of the previous structure, now you should understand and wait for this market to come back to test this level again, or probably this level, because this is your neckline of the W, correct?
Correct.
This is your neckline of the W. So market would either come this level or and bounce back in the uptrend. If it is wanted to make uptrend, it will come to this level and just break this level, or it will come this level, play in the range, and then move upward, right? So these are the ways the market will move. I will move to the next slide, which will show you.
So just one question before you move ahead.
Yeah,
In the previous
please.
slide,
Yeah, please.
in that W pattern, now we know that it is moving up, but so after breaking the neckline,
Mhm.
okay, suppose I have entered into the trade, okay, and after that there is a next key level.
Mhm.
If you can just draw it, it will be easy for understanding. Yeah, correct. Yeah, right. So now after this neckline got broke, suppose I entered the trade, and my trailing profit is the second line, because
one.
no the middle one.
This one, okay.
Yeah.
So where did you enter?
Be-
Where did you enter? You entered
in
here.
the first red line. Yes. Suppose if I entered here, because I know it is confirmed now, neckline is broken. That means it is going up. I have entered the trade.
Mhm.
So I have kept my trailing profit, the second line, the second red line.
Yeah.
Is that correct, or should I keep it the third line?
Okay. Let me answer you this. Now you have entered here, correct? Your safe TP is first here. Second TP is somewhere around this market structure, next level, correct? If the market is not touching this and bouncing back, why do you want to lose your profit you gain in 4 hours or 8 hours? Why do you want that? Why do you want to trail it? If you have already, in the trade, and this is 2 hours, this is 4 hours, this is 6 hours, this is probably 8 hours. Okay. Now you have already trailed it for 8 hours. First, you need to understand, does this is an uptrend? Does this look like an uptrend to you?
Yes.
No.
No. Okay.
No, because this is not yet an uptrend. See, this was a downtrend, right? This is your high. Does it broke any previous high?
No.
What was your
No.
what was your previous high? This?
Yes, that's the previous slide. Yeah.
Did it broke here?
No.
No.
Then it is not an uptrend. This is not an uptrend.
The uptrend is not confirmed yet because it's not broken.
No.
Okay.
This is you are still trading in the downtrend momentum. Understand this. This market could.
Oh, so no, I was saying it is, if it is boom, then can I
Yes.
enter there? So yeah.
This is boom. This is boom. We are only talking about the boom. Yeah. If it is crash,
That's buy it, right?
this is your sale. This is
Correct.
boom.
Sale.
So if this market is bouncing from here and not even going back, what you can do is you can trade in two types. If you wait for this area to get broken, or two, to get the confirmation of that this is now in an uptrend, or two, you take a risk here, you enter, you set your SL below this level so it doesn't go far away, and you
Correct.
ride till this level. You ride till only this level, because you are not seeing any broken of the market structure yet. If you see this is getting broken now, okay, now you know that the market is pushing up. Now it wants to make an very good uptrend. But when it is coming back, retesting this level previous structure and breaking this up. Getting my point?
Got it, sir.
I have a
Your
question.
yes, sir.
Yes, so you said this market structure you were showing us is boom, right?
Yeah.
Okay, in boom, are we buying
Hello? I can't hear you.
in the boom and then sell in the crash? So
No,
this
I
is
can't
boom.
hear
Are
you.
we buying or
Can
selling?
you just
You-
can you
Okay,
just
let me. Okay, can you hear me now?
yes.
Can you hear me?
Yeah.
Okay, yeah. I said we are told yesterday that in boom we buy,
Right.
and then in excuse me, in crash we sell.
Correct.
So this is boom. We are buying, right?
Right.
Okay, thank you.
So this works with the crash as well. Now in this area, in crash, would you sell? Will you sell
No.
in this area?
No.
No, no.
No, right? In this
Yes.
area, in crash, will you sell?
Yes.
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 And in boom, will you buy in this area?
No.
You can. But with second option, what you can do is you can get your confirmation at the key level and trade the pullbacks. Getting my point? But that is your second level
Isn't
of
that
trade.
risky?
Yes, of course. That is the reason why I explained the two type of trades. One, you get your safe confirmation, correct? And the second, you take a very small risk,
No risk.
very small risk, but only at the key level. If you identify the key levels correctly, trade there with very tight SL. You enter for the buy here, go to the next level. Correct?
Okay,
Sir,
so-
question. But
Yes.
if it is downtrend
Yeah,
and in crash, you are saying we can buy, correct?
correct.
But the buying will be in a ticks, correct? That one
That
minute
is
ticks and
for
all.
1 minute. That is for 1 minute. And this patterns or this market structure will not follow on the 1 minute.
Okay. Okay.
Understand this. This is what you are talking about the analysis. When you are doing the analysis on the higher time frame, like let's say for example 15 minutes or 5 minutes, even this will work in the 5 minutes, but that will be more noisy. You will not get that much of confirmation like 15 minutes, 1 hour or 4 hour, right?
Okay, so which time
Right,
frame
right.
is better?
See, if you are doing
Which
this,
time frame? Yes.
minimum is 15 minutes.
Okay,
If
minimum
you are
15.
analyzing, yes, minimum is
Okay.
15 minutes and maximum is daily. You can go because you are not holding the trade for weeks, correct? If one has the $1,000 or $2,000 of capital, then they are thinking about the swing, and at that point of time you can probably do that. Okay.
Sir, my question, I don't know, I'm little not convinced because yesterday's the lecture,
Yeah.
sir has mentioned that in crash, if it goes down in a minute, but and when it is climbing, it climbs in 1 minute, 2 minutes, 3 minutes, 4 minutes, like that.
Yes. Yes.
So when it is going up in crash, if it is going up, it dips down in a minute. So
Yes.
in crash, if we buy, it will be very slow progress, correct?
So I'm not saying to buy in the crash. I'm saying that even in downtrend, in this area, in boom, you can buy, but with the option 2, risk factor. Getting my point? Or still confused?
Yeah, no, not confused.
You are mixing 2 points. One,
Okay.
which is 1 minute trading, where the candlesticks will be tick bars. Okay.
Correct.
And you will get the spikes. 2, which is your higher time frame, where both will be candlesticks, whether it's going up or down. But the
Okay.
timing of the candlesticks will vary upon the pressure. Getting my point?
Got it.
Yes, if the pressure is so high in the crash, the candlesticks will be this much big in the 15 minutes. Whereas if it is going up, if the pressure is even too high in the buying pressure in crash, the bullish candlestick will be like this much only, or probably this much only.
Yeah, got it.
Okay, it will not be,
Now,
bigger than
Yes.
the bearish candle.
So my point is still there. If you trade with the option 2, you can trade pullbacks in the boom and crash. Even if it is a downtrend in boom, you can trade these pullbacks. But where? If you get the confirmation from the key level. Understood my point?
yes.
And with the safety, because you are entering here, you are risking this much and you are expecting this much. So understand the risk to reward ratio. See, why I told you to trade even in downtrend is, in trading, first, you cannot wait for 5 days. Correct? You cannot wait for 5 days to trend to become uptrend and then you get into trade. Because even then you don't know that the trend would make successfully. It can pull back. You never know. Right? So
Right.
the second option is to get the confirmation and take the risk. But at the very key point. Okay? Now clear?
Now got it, sir. Yes, very much. Very
All
much.
right.
Thank you.
I have one doubt, sir.
All right. Continue. Come.
Yeah, this market is support as a resistance and support level only, or trend line also.
Even in trend line, yes, we are going to
Hello?
do the trend line as well.
Yeah, okay.
I want you to get the clear picture of the market structure. Okay.
Okay.
So I'm coming back to the market structure wherein you get the 5 minutes chart in this slide. Okay.
Okay.
You see this red lines.
Yes.
Now in this picture, you will make it out very clearly. What do you see in this? That's a downtrend, right?
Yes.
Correct. What do you
Yes,
see?
correct.
This is a downtrend. So if you see the market structure, I want you to understand this market structure. This came down. Are you seeing this chart in a bigger scale, or should I? Because these are the tiny candles, you would probably not make it out. Let me
Yes, that
share.
timing.
1 second. Let me make it bigger for you. Now you can see bigger.
Okay, better.
Yeah.
Yeah, better.
Okay. So let me just draw it here. This red line represents the key level, even in 5 minutes, and the market structure. What the market is doing. If you see from here, the market is continuously coming down. Now the market is given you a spike. You can see this red line, even it has given you a spike here and it rejected from exactly there. Now you can see this is the level actually. You see that? Now after this big spike, what it did, it went down the one candle and given you a bigger spike. What do you see, understand from this area? That's your market structure. That's your market structure, because it didn't broke the previous level. Did it broke? No.
No.
It didn't broke the previous level. So this is a pullback. This is a pullback. This is called a pullback. Now what if even if it breaks and if you enter here, or probably after this spike, correct? Now that you know that the market is not going to go down again because it has rejected from this level, what your expectation is? Your expectation would somewhere lie here, because this was the previous structure, right? You can see that this was your low. correct? This was your low. Market came up, came down, retested, went up, broken, went up, broken, went up. This area exactly it just tested, and then it started to fall down. Understanding this? So this would become your key level. This would be your key level. Now see the flow. Market is going up again. What it is doing? Market is going up again. It is breaking this level. It is breaking this level, but before it broke that level, it made another structure. You see this where I'm drawing right now? Okay, that's your high, that's your pullback. It broke it, came back, broke it. Where it came? Previous structure. And if you see this high, what you need? You need market to come back here, and this is the key level, previous low. If it spikes here, what you would do? You would buy, right? Hello? If it spikes here, you would buy.
Yeah.
So if it doesn't and broke it, then you need to understand probably this move hasn't yet converted, and it could probably a pullback, because now you can see that if the market is breaking this point, this level, this is the high, this is the lower high, meaning what? Market is going to continue on the fall down, correct? Getting my point?
Yes,
This was
sir.
your low. This was your low. What it is doing here? It came back exactly on the 5-minute and show you the spike, correct? What can you risk? You can risk just a little and enter a trade over here, because this was the low. You don't have any market previously, and this is your last key level, correct? And very fresh. So according to that, what you can do? You can buy, and you can either stop on the previous high, previous low, or the next level, right? Even in downtrend, there's a second level of trade here, because this was the fresh support which was not being tested ever. And if you see the spike here, rejection here at the fresh support, you can understand that, okay, now market has given me a rejection. What is it trying to do? It can probably come down and retest this level and spike, and it did spike, right? Okay, now if you see the market is coming back again, you need to wait, correct, until it get over and shows you the next level of high. Did it make ever this next level of high? If you keep on making these lines, you would understand that the market structure is not getting broken anywhere. And if this trend continues like this, what's your buying point? Where is your buying point? There isn't any key level. There isn't any key level that you can trust now, correct? So if you are in boom 500, will you buy here anywhere? I wouldn't dare to buy it, correct? Because you already know that the market is constantly making the higher lows. This is higher low, this hasn't broken, then it came back down, higher low, higher low, higher low. It just keeps on. Now Check this out. I mark this higher low, right? I mark this higher low. If the market is going back again, where it comes, it just comes back to test it. If it is bouncing back from this level, again, what you need to understand, it is showing clearly that the market is still wanting to go down unless and until it is not breaking any lows where the market is not there, and it breaks and create a new high higher than this high, then you can expect the market to go more up, right? Are you getting my point? Any confusion?
All clear, sir.
Yes. So if you see this market, this black line is your low, correct? This market is broken already. Now this is the spike. Now we put the line here, correct? I put the black line here. Did the market ever come here? No. It just makes the lower highs. It keeps on doing it. If it makes the low, it just come back to spike and retest it. You see that this was your low. This was your low wick. Market came back, came down again. This was your low. Market came back, goes down again. Spike, market goes down again. It spiked. What to do? It came back again to test the previous structure. And if it is not going up again and going down, we should understand that this is going to go more down. This is how the market of boom and crash flows. Now, after this market, what you see, you can relate these lines. You can relate these lines as the previous structure. Now it will follow the same manner. You see these lines, it will follow the same manner, because let me just show you. I put the line here, I put the line here. It would be most nearest area. You can get the spikes. Okay. This is your resistance key level from where the market is rejecting, but this was your key level support. Now it is the higher lows. It is the higher lows, and this level, if this level is getting broken, what you do? You can straight away buy to this level, correct?
Yes.
Because this previous structure has been broken now, and there is no previous lows been getting created. Am I making anything confusing?
No, sir.
All right. So this is your impulsive move. Now market comes back, you wait and watch. What is this doing? It is not breaking this low, meaning this would probably want to go high. And if it does, what it will do next? It will come back and retest this previous level. It does. If it spikes, you are continue. It is not making any lows, correct? So what happens in 5 minutes, it repeats in every time frame, irrespective of what time frame you are using. This market structure has been followed everywhere. How it comes down, it will go up like that only. This is your structure. If it comes down, retest, comes down, this is your impulsive wave. Understood? This is your normal wave. It retests previous level, goes impulsive wave, comes back, tests this low, doesn't make any new lows, and goes up like that only. Does it come back here? No. If it doesn't come back and bounce back here, you should understand that this would probably go till here, the new high, correct? Or even it breaks that and go to the another high, which is in previous level. Mark this line. See? Correct?
Yes, sir.
All right. I'll quickly just wind it up with this session because it's getting too complicated or too confusing to you, I guess. Nobody is responding actually.
So
I
rainy
presume
days,
that no, I
rainy
presume
days
that
is over.
Well,
sorry.
it's sinking little by little.
So on right side, rainy days are over. It's now boom, 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 boom.
So this is 5-minute chart. Okay. Now I'm taking you to the main concept, which I did and which I want you to do that. And then I'll show you on the chart how I draw the draw my charts. Okay. To finish today's session. All right. So this is the chart I have drew 50 times. How many times? 50 times. On the boom 1000, crash 1000, boom 500 or crash 500. I pick out a different areas in the TradingView application, web-based application, and I mark down and drew this almost 50 times by deleting it and redoing it again. Why? Because this is very important portion of trading boom and crash. If you don't understand the market structure cluster, you would never make it out a sniper entry out of that. You see this, I will share this on the group, and I would expect you to do this practice again and again on the chart, irrespective of the time frame. But pick at least 15-minute time frame minimum. Don't go on a 5 minute or 1 minute for the analysis. Okay. So in this chart, I have mentioned everything. This is your double bottom, expectation of what? Market to go up. This is your key level. Same top reversal, coming back down again. Everything is pointed down. Everything is pointed down in this chart. If you just go step by step on this chart, you will understand the market structure, right? I will share this with you on the group, and probably I would like you to do one chart at least for tomorrow, like this. Okay.
Yes, sir, we can try our best.
Yeah, definitely. We need to try it out. See, if we don't try it out, we would not be able to understand that. Correct?
Right. Yeah.
Okay. So let me just. So now you can see the trading view on boom 500 or the 4 hours. Right? So how do we do the top-down analysis? I will quickly guide you with the 24 hours, which is 1 day. Let me just remove all the drawings and show you how I use it. So on the 24 hours, I would probably do only 2 lines, top and bottom, which is my black line. Okay. So highest high and lowest low for the recent time is my play around area for the next couple of weeks, actually, because this is a daily time frame. And then I'll go to the 4 hours. Okay, now we are in the 4 hours, right? So what I need to do is I just need to adjust this at the maximum touch I can get. You can probably make this as a zone as well, because if you start from the body and you have to extend it till the wick, in boom and crash, wick is very important. In the higher time frame, wick is very much important as well, equal to the body top or bottom. Okay, now it's very clear. Done. Okay. All right. So this is my top and this is my bottom. Now where the market is on the 4 hours, market is running over here somewhere. So what we need to do is we need to find the other levels. How do we do that? I need to just squeeze the market and look at the larger scale. I'll quickly put some lines on the 4 hours. Probably I'll change the colors to blue. For the 4 hours, I'll make it blue. All right, we are done with the 4 hours. Okay. We just need that only. We'll go to the 1 hour. Okay, now this is our main area, right? So what do we need to do? We need to fine tune these levels first. One day is top, where the market would probably go in next couple of days, maybe 1 or 2, if this spike keep on spiking up. Okay, so this area, this line probably need to be corrected, because this is your key level. And then we have this line. Okay, this line. Now what I'll do is, this is your zone actually. Getting my point? And I will delete this line, 4 hours. So now I have a middle zone on the 1 hour for the support area, from where the market has maximum time touched it and rejected it. If you can extend this, you will see this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Correct?
Correct.
So this is the zone. Now this area is also a zone. Don't make it too much bigger. Just make it where the maximum time the market is touched and rejected. Correct? So that's your zone. Now you can expect the reaction on the zone and watch on 1 hour what it does. If it breaks and go up, you are good with the buying trade, because market is continuously making the upper movement. It is not breaking this low, which is previous structure. You can see that. Let me just enlarge and show you that. What was your previous low? Here. Correct? So
Yes.
if it is not
Yes.
breaking and going up, what is the indication? The indication is that the market is wanting to go up. Now, if we see it is breaking and going up again, we can buy, and we can buy from the risk of what? Let me show you. Long position, we can get the entry like this. Your risk is this much. Your reward is this much. You're getting my point now. So what you're risking is probably $2 or $3, and your reward is probably $10 or $20. Correct? Because now we have a confirmation that this structure is not broken, and the market has made the two big candles, but it is still in the zone of the resistance. It is rejecting. So we wait for it to break it out. Let me delete this. If it is breaking out, we can probably buy from here and ride it with the very, very sharp and tight stop loss. Correct? Because that is the confirmation. All right. So let me draw this again and show you the zone. On 1 hour, this is also a zone, and delete it. So I am reducing the load of the 4 hours. Now I can expect the market to move till what? This area, because this is another key level. We can see that clearly. If we minimize the chart and we can extend this, we can see it clearly. The market is coming back, coming here, rejecting, coming here, rejecting, right? Here it also rejected. So this is your key zone. So even if the market is giving you a buying opportunity from here, my first soft target is up till here only, correct? Because this is a resistance zone again. So this is the area to be watched, and this was your previous level. Recent high is this only. So you have a pretty difficult chances to break it out up till this area, correct? Unless and until we see a strong movement, we do not take the risk. Are you getting my point? Is this clear now?
Yes, sir.
So this area is not in play. This area is not in play. What you need? You need only this area. Why? Because the market is in this area for a couple of hours and it is not going to break this area very soon. So what you need to do? You need to just focus on this area only. You don't have to go back far enough. So even if we clear this out, everything, and do it from this scratch, only 1 hour, and don't go anywhere else. Now that we know the market has made the buying and made the high. So this is my resistance. This is my recent resistance. This is my previous structure, correct? Which was a resistance. This is my fresh structure of the lows. I need to play in between these three sectors. All right. Then comes back the trend line. So what this trend line shows you, if I draw it like this or like this, what it is showing you? There are two ways you can draw the trend line. First of all, keep the maximum touch. Don't worry about whether it is a body or the wick. You need the maximum touch. That is your valid trend line. Sometimes you have to draw like this. Because these are the fake breakouts. You can see that clearly. If you draw here, you would probably think that the market has still pretty room to go back here. No, in boom and crash, it is little different. Okay, you need to utilize the maximum touches. So this is your first, this is your second, third, fourth, fifth, 5, 6, 7, and here also it's rejecting. It has not touched yet. Correct? Then you have your upper trend line. First touch, second touch, third touch, fourth rejection. What do you expect from this? It is squeezing in. Correct? Now you have the area blocked out to see that market is not going beyond this area. These two lines. Even if you remove the support and resistance levels or zones, you know that the market is not even crossing these two trend lines. Correct? So what you need is, you need a rejection from this area. If it is a crash and you see the rejection from this area, you can sell because you can easily see that this is a move. The sellers are pressuring. So there is a high chance that this is a resistance zone, and if the market is rejecting from the even from the trend line, there is a probability that the market will go back down and touch this area again. Correct? This is how you will filter the market. This is how you will going to analyze the market. Now go back to the 15 minutes. Even if you want to do the lower time frame analysis, now that you have drawn the 1 hour chart, you can go back to 15 minutes and see the market is what market is doing. See the behavior. Now you can reset the trend line according to 15 minutes. Right?
So that means the
There is
market
a room.
that's coming down.
Yeah, so there is a room to come down, but what this trend line shows you, that's a high, lower high, lower high, your lower low. Okay, the market came back to retest it as per the market structure. Build the story. Build the story basically. Let me delete and show you. Okay, this is your first high, correct? Your lower high. Second, third is your lower high, lower high. Now it has made the low, went up, went down. This is your level, correct? That's your level. Let's draw a line or a zone. Now what you see? It went down, went up, trend line rejected, break it out, just went up. What to do? Just to retest the previous level. Now if it is going down, what do you expect from the market? It would probably go till this level, correct?
Yes.
Or at least this level, this zone.
Yes.
Correct? This is
Yes.
your zone. So you will wait for market to reach here, and if you see there is a rejection, what you can do? You can probably take a trade, but
buy
that would
from
be
there.
but that would be a risky trade. Why? Because now you can see clearly that the market is constantly
down.
making the
Lower
lower highs and lower lows. So that is the risk you are taking. So either you can take a risk or wait for the market to give you another high than this one and retest, buy. Correct?
Correct.
So you got the idea how you can draw the chart, right? So tomorrow we will continue with the trend line and trend channel. Okay. So if there is any question pertaining to the current session, you can ask now.
Mithal, we should use this TradingView app for analysis, or we can do this analysis on the MetaTrader itself and trade there.
No,
What do you
Harish,
suggest?
what you can do the same on the MetaTrader as well. You can do the same on the MetaTrader as well, but you will not find this tools so easy on the MetaTrader.
Okay.
Okay, see
So
what
it's
you can do
better
is,
here.
yeah, it's better here. You can do trend line, just put it like that in favorite. Then this horizontal ray, put it in favorite. Then you go to the rectangle, put it in favorite, and just save it. You can, whenever you draw something, just remember to save it here. So next time when you open this chart will remain same.
Okay.
Okay.
So
Now you draw like this. This labels. You pick it from here. That's your structure. Correct. You save it. It will remain same for even every time frame. You go back to 1 hour, it will be there. And it is very easy. If you do the analysis here, it's very easy to operate these tools.
yes.
Right?
So for learning, we do this, or permanently we use this for the analysis and then trade
See,
there.
I will not force anyone to use this tool or MetaTrader because it's a personal choice. My preference is, what I do is I usually use 3 different browser to keep my 3 different analysis. You would not believe that, but yes, I do have 3 different browsers, and I have the saved analysis in 3 different browsers. One is for daily time frame, one is for 4 hours, and one is for 1 hour.
On different browsers?
Yes. Right? But what you can do is you can just use this, get used to it. Or maybe if you are comfortable with the MetaTrader, you can do it. No problem. Because even in MetaTrader, you have the flexibility of these tools, but not so much of flexible like so quickly you can do over here.
Okay.
Yeah. Any confusion or questions?
No, sir.
Okay.
So So what is the assignment for tomorrow then? What we have to come back in?
All right. So I want this kind of, cleaner chart analysis on the 1 hour. Boom, 500, crash 500, crash this boom 1000 and crash 1000. But this time, what we will do is we will use this key level zones only with trend line and trend channels. If you can identify that.
You talked about channels.
Yes.
Yes. What are the channels there?
Okay. I will show you only one example, and
Okay.
then we will continue with that tomorrow.
Okay.
What do you call this? For past.
Channel.
It's right.
Exactly.
Okay.
Absolutely. Absolutely. Okay. If we remove this even, and on the 15 minutes only, if we do this, what's this? That's your channel.
Channel. Yes.
Because quite a few times market is running in the channel. It breaks down, but it was a false breakout. So it came back in, went down, went up, went down, went up, it breaks down, come back in the channel, and this time it broke up. Now what it is doing? You extend the channel and see. Correct?
Okay. So in between,
Yes.
there's a channel. It's running in between.
Yes. So that is your channel. That is your channel, and this has an important role to play. When you analyze the market, this is really very important sector to not bypass anything out of that. Because if you draw like that, you will know what market is doing and where exactly you wanted to go. Correct?
Okay. Correct. Correct.
So tomorrow I want you do this on the 1 hour chart, but don't clutter it up. Just do what is necessary to do and make it very simple and very clean, so that you can understand the flow of the market and where you want to go next. Right? Getting my point?
Done. Yes.
Yeah. All right. Ishak bhai?
Yes, brother.
Oh, you are there. I thought.
Yes, I am here from the start.
All right. So I think everyone should be exhausted with the only
Because
support and resistance.
I know that the time it is when we start
Exceeded.
from the 6:30, it is every session is getting minimum 2 hours, right? Because the things are very complicated. So that's why we are paying the time. We are not only giving you the 1 hour on each session. It is depend when we will cover our topic. If it is getting 1 hour or 2 hour, we will give you the time, right? So you must don't be bored on the these topics, because it is very important to know. Otherwise, you will never analyze the market. So I hope everyone will understand, because I'm looking at it. There are only 6 members which are online here. I don't know why the 4 members not in the meeting.
Oh,
They joined us, but there are only 6 members. They are listening our session from the first to end.
see, missing out on this things and don't discuss it out will only give you a confusion. You will later realize that I should have asked this questions around this, because these are the important rule set. If you observe for 6 months this market, you will come to realize that, oh yes, now I understood that why this was an important part. Correct?
Okay.
So-
Okay. So,
Correct,
so
absolutely.
tomorrow is still the trend line and
Yes,
key
yes,
level
yes. We
session,
will.
right?
No, tomorrow we will continue with the trend line.
Trend lines. Okay. So trend
Yes,
lines
yes.
tomorrow again. We will give them the idea and information, and then we
Yes.
will move to the chart patterns, right?
Yeah.
Okay.
All right.
Noted, sir. Thank
Okay.
you.
Thank you
Okay.
so much, brothers.
Thank you, everyone.
Thank you, sir. Thank you, Ishaq, sir.
Thank you, sir.
Thank
Thank
you. Thank you, brother. Thank you.
Thank you,
I
guys.
have one
Bye-bye.
question.
Thank you, bro.
I have one
Thank
question.
you,
One
class.
question.
Yes, yes. One minute. One
Yeah,
minute.
you were
One
talking
minute.
about 1 hour chart. My network went off, so I didn't hear you. You said 1 hour chart, something like that.
Yeah, this is 1 hour chart. You have
Yes,
to
you were
draw
saying something about tomorrow. Yes, you said we should draw something like for my
tomorrow.
network.
See
Yes.
okay. What you need to do is tomorrow's homework is assignment is you open each and every chart, right?
Okay.
I'm opening boom 1000 chart on 1 hour.
Okay.
What you need to do is you need to draw the zones, support and resistance zones
So,
on the chart, bare minimum required, whatever you feel is right. Okay.
okay.
And then you need to add trend line and trend channels.
Okay.
Okay.
For the four
This is your,
charts.
yeah, for the 4 charts. This is your trend line and this is probably your trend channel. Correct.
Correct. Correct.
So you need to draw according to your knowledge, whatever knowledge you have. But whatever we are gonna do is tomorrow we are exploring that area.
Okay.
Right. So whether it's right or wrong, don't worry. You just have to
Okay.
do it. Okay.
Okay, you can correct us when we submit the
Oh,
assignment.
yes, yes, yes. Tomorrow we will rectify everything. The same details
Okay.
we are going to discuss tomorrow as well. Okay.
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 brother.
Yeah. All right, everyone.
Thank you. Thank you.
All right.
Bye-bye.
Thank you very much.
Bye.
Good night.